think we start recording.
Guys, anyone have any question? If anyone have any question, feel free to ask. إذا في حد عنده أي سؤال مش عارف يسأله بالإنجليزي عادي يسأله بالعربي. هاي آخر لقاء حيكون عندنا في مدى دراسة الجدوى. إيش في عندك أسئلة متعلق بدراستك؟ في شغلة أنت متورط فيها مش عارف تعملها؟ We are here to answer you. Okay, Dr. Abdurrahman, you take the lead.
Okay, thank you very much, Dr. Bassem. Before the break, we asked about a question about the current ratio. We asked a question about the current ratio. What is that? If we have like a current ratio, a high number for the current ratio, which is better, a high number for the current ratio or a low number of the current ratio? Who can tell us? Think about the definition. It measures the ability of the firm to meet its short-term obligations. So consider it as 1. If the current ratio equal 1, in that case, I can say that the current assets can meet all the current liabilities perfectly. Why? If the ratio equal to, for example, in this case, I can say that the current assets can twice meet the current liabilities, which means that I can pay off my current liabilities twice, which means this is better. The higher the current ratio is, the better for the company, because it shows us that the liquidity in the company is sufficient in order like to cover or to pay off all the current liabilities that we have. And this is a very important ratio, because we want our project to be like to keep running, so it is important. But if we are speaking about large companies, we know that large companies have an access for the credits. So the banks that can lend, for example, Baltel or Bank of Baltel or Padico, for example. But for a smaller project, like someone who has a falafel shop, for example, the bank will not lend him. At that time, in that case, we can expect that the current liabilities or the small shops or the small businesses have no access or have a limited access over the credit or on the credit. So in that case, we can expect that the current liabilities is not that much for the small firms. So the comparison gonna be fair if we compare companies that have a relative size, but it is gonna be unfair if we compare small companies with large companies, because now we have different characteristics. So this is the first ratio about the liquidity ratios. Now let us speak and move about to speak about the quick ratio. Now the quick ratio excludes the inventory. In other words, the quick ratio, it is the same as the current ratio, but we have to deduct the inventory from the current assets and divide the result on the current liabilities. Okay, what is the idea behind that? What is the idea behind the quick ratio? Sometimes they call it the asset test. It is also look about the company's financial health and liquidity, but also includes the company's inventory. So we have to deduct the inventory from the equation. Why we have to deduct the inventory from the equation? Uh, we are speaking about liquidity ratios. So we know that we have a liquid assets and inventory, one of the liquid assets actually. It is one of the liquid assets, but it is the less liquid asset. It is the less liquid asset. Some authors or some researchers, they refer that the inventory on average need 80 days in order to be converted from its phase, like from its tangible phase, to be in a cash basis or a cash base. So we need, in order like to transfer or convert this liquid asset, we need 80 days on average in order like to convert it. So sometimes we are looking about the more quick ratios. This is why we move from the current ratio, which doesn't consider the inventory in its calculations, and we include now in the quick ratio the inventory, or we deduct the inventory in the quick ratio, as we want to eliminate the inventory. We just want to focus about the mostly liquid assets that the company have. Again, the more the ratio, the better for the company. Now we have here an example. Now we have an example about three different companies: Dell, Home Depot, and Lewis. Uh, all these three companies, they have the same current ratio: 1.3, 1.3, and 1.3 for all these three companies. Now, if we only look about the current ratio, and this is why we have different financial ratios. If we only look about the current ratio, so as a researcher or as an evaluator or as a business developer, I'm gonna say, I'm gonna say that all these companies, they have the same financial performance, isn't it? They have the same financial performance according to the current ratio. But when we go and calculate the quick ratio, we find that they'll have a quick ratio of 1.2. Home dot, it has a quick ratio of zero point 0.4, and Lewis, it has a quick ratio of 0.2. In that case, if I ask you a question, which company can settle or can pay off its current liabilities more quick or more quicker? According to the current ratio, we can't judge. But according to the quick ratio, of course, we can say that Dell is the best company according to the liquidity ratios, because it can like settle down or pay off all of its current liabilities in a better way. So it doesn't require like more than what it what current liabilities it has. Okay, now let us move uh, to discuss uh, the activity ratios. We're gonna move more faster now. Let me move more faster, because we do not want like to spend all the time discussing these ratios, because I know you have a limited time and you have other plans for this day. And in order like to enable you to ask whatever questions that you want from Dr. Bassem and me, I prefer not related to the subject actually. Activity ratios, inventory turnover, such as the inventory turnover. And we mean by inventory turnover is a measure of the number of times inventory is sold or used in a time period such as a year. So how many times we sell our inventory in each year, for example. So how we can calculate, and of course, the better, the higher the inventory turnover, the better for the company. But again, it depends on the characteristics of the company and the industry where this company work. The cost, how we can calculate the inventory turnover? It is equal the cost of goods sold, from where we can bring or collect the cost of goods sold from, of course, the second item in the financial statement, in the income statement, and we can divide this over the inventory. Okay, from where we can obtain or collect the inventory. If you go to the balance sheet, you can find the inventory at the last the last item in the current assets. Okay, dividing the cost of goods sold over the inventory, it is gonna give us, for example, for this is the example for Bartel company, it's gonna say 7.2. Now 7.2, is it a good or bad? Again, we have to compare this number with with different numbers. Maybe the inventory turnover for Bartel company, the same company, over the last years, or we can compare this number with other companies, but make sure that these companies are operating in the same industry. It should be operating in the same industry. It makes no sense if I compare a telecommunication company with an industrial company, or with a service, or with a financial company. So make sure all the time that you are comparing the same characteristics, or the company with some companies that have the same characteristics. Okay, now the average age of inventory, it is very easy. From the inventory turnover, we obtain 7.8. The result of the inventory turnover, we can divide 365 days, which is the days of 1 year, over the inventory turnover, and it tells us that the result is 50. What does that mean? 50 days, what does that mean? That means that each 50 days, I sell all of my stocks or my inventory. And again, I need another 50 days in order to sell another amount of inventory. يعني انه انا بروح بجيب الانفنتوري عندي 100 وحده، خلال 50 يوم بعت ال 100 وحده، رجعت شريت اخرى 100 وحده، ورحت بعت ال 100 وحده هاي خلال ال 50 يوم الاخريات او التاليه. Okay, the average collection, again, the average collection period, the average collection period is the average amount of time needed to collect accounts receivable. Now we are speaking about the account receivable, and what does the account receivable represent? The account receivable represent what the company, the obligation for the company on the other companies. Like if I sold, for example, if I sell the 100 units that I have, and these units I sold them in a non-cash basis, which means debt on the other customers. So in that case, I will record these transactions on the account receivable. And from where we can collect the data for the account receivables, of course, we can collect the data from the balance sheet. Again, it's one of the components of the current assets. And we can, in order to calculate the average collection period, we have to divide the accounts receivables over the average sales per day, which is the annual sales that we can obtain from the income statement, the first item in the income statement, and we divide it over 365 days. Again, the average collection day, in that case, we can say that the less the average collection period, the better for the company. The less is the better for the company. لأنه بالطبيعي إنه أنا إذا بستطيع إنه أنا ألملم ديوني من السوق بشكل أسرع، هذا بيكون أفضل اللي هو للشركة. طيب نروح ل another activity ratio, which is payment period, which is the average payment period. Again, the average payment period عكس ال collection average collection period. ليه؟ لأن الآن إحنا بنتكلم عن accounts payable. Now we are speaking about the accounts payable. طيب accounts payable وين بنلاقيها أو شو هي accounts payable؟ accounts payable هي الالتزامات اللي موجودة علي نتيجة شراء السلع والخدمات من companies ثانية in a non-cash basis اللي انا شريتها على الدين على الدفتر يعني. طيب هاي الاكونتس بيبل again نفس المعادله ولكن بنستبدل الاكونتس بيبل بالاكونت ريسيفبلز بالاكونتس بيبل. So the question here, which is better, the higher the ratio or the lower the ratio? طبعا الان بتصير العكس. The higher the ratio is the better. قديش انه السبلايرز يس قديش انه السبلايرز بيصبروا علي اكثر في الديون تبعتهم، ديون طبعا الجودز والسيرفيسز اللي انا استخدمتها as an intermediate goods، قديش بيصبروا علي اكثر قديش بكون انه افضل للشركه، لانه هذا بيديني وقت اكثر انه انا ادور المال تاعي. طيب now we have the total assets turnover, which is one of the most important ratios as well. We can divide the sales. The sales, again, we can obtain the sales from the net income over the total assets, while the total assets we can collect it from the balance sheet, So it is a financial ratio. The assets turnover is a financial ratio that measures the efficiency of a company's use of its assets in generating sales or revenues or income. Okay, how that means? What does that means? What does that means? That means إنه إحنا بنشوف الآن كفاءة الأسيتس اللي موجودة عندنا، قديش إنه الأسيتس هاي بتعمل جنريشن للسيلز. طيب which is better? Higher ratio or lower ratio? Again, higher ratio or lower ratio? Again, إحنا بنشوف كفاءة الأسيتس قديش بتعمل جنريشن للسيلز. بمعنى آخر كل ما كانت الريشيو هاي أعلى كل ما كانت كفاءة الأسيتس أفضل، وبالتالي the higher the ratio the better for the company. The higher the ratio the better for the company. طيب the higher يعني كان نوصل لواحد لاثنين واحد ونص ثلاثة خمسة 10. Again, we don't know. We have to compare the ratio with other ratios in the industry, and we have to compare the assets turnover for the company in the current year with the assets turnover for the company in the previous year or the previous years. So this is what we should do. Now we have another ratio, which is the debt ratio. We have the debt ratio here, which is the total liabilities over total assets. The total liabilities over total assets. Again, here, how much our assets can cover the total liabilities. And in that case, it depends. I can't say that this is good or this is bad. It depends on the characteristics of the company, because some companies, they tend like to borrow more money, and other companies, they prefer to finance their activities from, we know that we have two different sources of finance. We have like, we can finance our assets by liabilities, and we call this the financial leverage. Or we can finance our activities by using the owner equities. So it depends on the decision here. It depends on the decision of the board of directors, of course, whether to finance our activities from liabilities or owner's equities. So if we tend to finance, for example, our assets from owner's equity, and we find the total the debt ratio, which is the total liabilities over the total assets, is a high ratio, in that case, we can say that there is a danger around the performance of our company. Here again, we have the debt to equity ratio. We can divide the total liabilities over the common stocks equity, and here we can compare. We can make a comparison between which source is mostly used. Which source of finance, of course, is mostly used in order to finance the assets of a company. If the ratio of this ratio is greater than 1, then we can expect that the total liabilities the total we use the total liabilities to finance our assets. But if this ratio is less than 1, then we can say that we finance our assets from the common stocks or the owner's equity more. Now we're gonna move to profitability ratios. First of all, we have the gross profit margin. The gross profit margin, it is the sales minus the cost of goods sold over the sales, or in a different way, we can say the gross profits over the sales. And of course, the higher the ratio, the better for the company. And again, for how much in order like to say it's better for the company, again you have to compare with the previous data or previous calculations or a benchmark or the company which are listed in the industry. Now we have the operating profit margin. The operating profit margin, in a very quick way, we have to divide the operating profits over the sales, or all of this data from the net income. We can obtain it from the net income. Here, the net profit margin dividing the earning available for common shareholders, which is one of the least items in the income statement, over the sales. And here we have the earning per share. It is the earning available for common stockholders over the number of shareholders of the common stock outstanding. This is an important an important ratio that each company listed in the financial markets they can calculate. In your feasibility study, you can use this one as long as you have like stockholders. But if you do not have stockholders, then there is no need to calculate the earning per share. Return on total assets, which is ROA, one of the most important financial ratios that measure the performance or the accounting performance of a company, is the return on assets. And return for assets, we divide the earning available for common stockholders over the total assets. Sometimes they divide the net income, not the earning available for common stocks. Sometimes they, in my opinion, this is gonna be the net income. This is gonna be the net income over the total assets. And of course, we can obtain the net income from the income statement, and we can obtain the total assets from the balance sheet statement. The return on equity, again, here, the net income over the common stocks equity or the total equity. This is one of the most important financial statement. The last thing, we're gonna speak about the market ratios. P over E, this is one of the most important ratios as well, the price over the earning. We can divide the market price of a share of a common stock over the earning per share. And actually, in your feasibility study, you can't use this ratio as long as you are operating or conducting a feasibility study for a small company or for a micro enterprise. This only can be for listed companies in the financial market, because we are speaking about the market price. I would prefer to stop here. And before we turn to our second section, I would like to ask you if you have any questions related to this lecture. Do you have any questions? Guys? Hello guys.
في حد عنده سؤال شباب؟ في حد عنده أي استفسار علاقة في المادة اللي شرحها الدكتور عبد الرحمن أو في دراسة الجدوى بشكل عام؟
في المايكرو ايكونومكس لسه يعني بنجاوب.
دكتور أنا عندي سؤال صراحة.
تفضل.
نفتح الخط للشباب.
اوكي.
لأن لو تروح لنا بعد إذنك على السلايد اللي فيها الريشيوز.
Okay, just give me 1 second. Yeah, this one.
Okay. الآن for this student, do you suggest that everyone should do all these ratios to understand if their visibility, if their study is visible, or if their business or project is visible or not, or we can just select some of these ratios?
According to their feasibility studies, isn't it?
Sorry?
For the use of conducting a feasibility study, isn't it?
Yeah.
Yeah.
Yeah, for the visibility study. Do you think that we should use all these
No,
ratios, or we can just pick some of them?
no, not all of them. I would recommend, first of all, the payback period.
Okay, shall we just mark it, please? Just I will use the marker to uh,
Is
to
it
uh, to help you. I will mark it. No worries. I
the
will mark
current and the quick ratio,
quick, current, and the quick ratios. Okay.
inventory turnover,
Inventory turnover. All right.
uh, for small projects, I would prefer to calculate the average collection period as well.
The average collection period. Okay.
Assets turnover,
Assets turnover.
not all of them. Okay, the debt ratio,
The debt ratio. Okay.
return on assets and return on equity.
Return on assets and return on equity. Okay.
Yeah, and the net profit margin as well.
The net profit margin. Okay.
For the feasibility study, I would recommend all of these ones.
Okay. So guys, we can do the payback period, current ratio, quick ratio, inventory turnover, average collection period, assets turnover, debt ratio, net profit margin, return on assets and return on equity. And I guess all these ratios are clearly clearly shown in our lectures. Also, I guess that you've been studied all these ratios in the financial management as well.
Corporate finance, isn't it?
No, they studied the financial management with Dr. Ahmed.
Okay.
So I think all these ratios are clearly shown in the lecture.
طيب.
And does anyone have any question? في حد عنده أي سؤال متعلق بهاي الريشيوز؟
طب اللي
احنا يا
موجود
ريت دراسات الجدوى تبعتنا نشوف
بس
هاي
موجود بس يرفع
الريشيوز.
على الشات يعني.
تفضل. اللي خجلان يكتب على الشات فيش مشكلة.
شكله ما في حد عنده question.
انهي هذا السؤال. طب اللي حاب يحكي أي شغلة، هاي آخر لقاء نحكي فيه مع بعض، بعد هيك مش حنحكي مع بعض. في حد عنده أي شغلة يحكيها؟
مش بالضروري related للفيزابيلتي ستدي، يعني بدكم تسالوا الدكتور باسم عن شيء معين، بدكم تسالوني عن شيء معين له علاقه في دراستكم، له علاقه بالدراسه مثلا في الخارج، شو بدكم تسالوا؟ تفضلوا.